Welcome to the new quantum era. I'm your host, Sebastian Hassinger. I want to start somewhere slightly unusual today with the stock market. Not because I think a ticker symbol tells you much about a science, but because of what the arc of quantum's arrival on the public markets says about where this field actually is and where it thinks it's going. The first time a pure-play quantum company faced public investors, it did so sideways. IonQ reached the NASDAQ in 2021, not through the front door of a traditional IPO, but through a SPAC, a special purpose acquisition company, which was the financial vehicle of that particular moment. It let a pre-revenue company sell a 5-year projection rather than a track record. Rigetti and D-Wave followed the same way, and the markets briefly lost their minds. By 2025, you could watch individual quantum names swing thousands of % on the back of a single error correction result out of someone's lab. It's estimated that Google's Willow announcement in December of 2024 moved something north of $100 billion in market capitalization across a handful of quantum-exposed tickers, a number wildly out of proportion to any revenue any of these companies had ever booked. This is not a market pricing a business, this is a market pricing a story. Last week, the arc bent again. Quantinuum went public, and this time through the front door, a conventional IPO of a vertically integrated company with real customers and a real balance sheet behind it. After years of the milestone being gestured at and never quite arriving, the first proper quantum IPO is here. And it's worth pausing on what that means because it's genuinely a marker of maturity. It says the technology and the businesses being built around it have reached a point where the more disciplined corners of the public markets are willing to underwrite the thesis at scale. But I want to be careful because it is still early days, and I think the lesson of the last 4 years is precisely about the gap between a stock price and the science. Access to public markets is enormously valuable. Deeper pools of capital, liquidity for the people who took the earliest risk, a currency you can use to acquire and to hire, and motivation for future investment, which is still required. All of that's real, but all of it comes with a cost. Public markets reward narrative and a quarterly momentum, and a field this young, this far from broad commercial return, is exactly the kind of story that can get ahead of itself. The danger was never the IPO, it's what the IPO can unleash, the pressure to perform against the stock price rather than against physics. The street has a tendency to motivate unnatural acts. The risk for quantum is that we start optimizing for the next quarter in a field where the real timeline still runs in decades. That's why my guests today are so well placed to talk about this particular week. Because the company that just rang the bell traces its lineage to Cambridge Quantum Computing, the software company that merged with Honeywell's quantum hardware group in 2021 to form Quantinuum. And my two guests were there at the very start of that story, not as operators, but as individual investors. Angels who backed CQC early when it was still a Cambridge software shop raising a Series A, and the idea of a quantum IPO would have sounded faintly absurd. In fact, that's where they met each other, as co-investors on the cap table of the company that just became the field's first public pure play. They have, in other words, personally watched one quantum company travel the entire distance, from an angel check written when there were fewer than 20 quantum companies on Earth, all the way to the closing bell. There are not many people who could say that. That journey shaped what they do now. Kris Naudts and Zeynep Koruturk are the co-founders of Firgun Ventures, a London-based firm built around a structural problem the two of them watched up close. If you've been following this market, you've probably seen the same shape I have. Plenty of seed and pre-seed activity from thematic funds and family offices willing to take scientific risk on a small ticket, and a handful of very large players at the top. But in the middle, where a company needs to lead a Series A or B to get from a lab demonstration towards a deployable system, there's a gap. That's where promising companies quietly stall, and that's the gap Firgun was built to fill. They launched in late 2025 with a $70 million first close on the way to a $250 million target, anchored by the Qatar Investment Authority, with a mandate to lead A and B rounds across quantum computing, sensing, and communications globally. Kris and Zeynep also arrived at quantum from almost opposite directions, one from neuroscience in the lab, one from more than a decade inside one of the world's largest financial institutions. And the contrast turns out to be the whole point of how they evaluate a company. We get into why a specialist fund is needed at all and what diligence looks like when the risk isn't just engineering and execution, but still unsettled science. How they think about backing very different qubit modalities at once, what it means that sovereign capital is flowing into a field increasingly treated as dual use, and where the binary fault-tolerant or bust way of framing quantum misses most of what's actually happening. There's also a moment near the end from Kris that I haven't stopped thinking about, a quiet corrective about the limits of what any amount of capital or enthusiasm can actually force into being. The week of the first quantum IPO, of all weeks, it lands with some weight. Before we get into it, a quick word from our sponsor. This episode is brought to you by Outshift, Cisco's incubation engine. Computational demand is outpacing what classical systems can deliver in drug discovery, materials, finance, everywhere. Outshift's bet is that the answer isn't a single quantum machine, but a scalable quantum network. Distributed devices connected through open standards and a vendor-agnostic architecture working as one resource. Learn more about the Cisco Universal Quantum Switch at outshift.com. And now, here's my conversation with Kris Naudts and Zeynep Koruturk of Firgun Ventures. Zeynep, Kris, thank you very much for joining me. I'm really looking forward to this conversation. It's very timely, and I've been interested in what you've been doing in Firgun for a while now. Kris, if we could start with you, you both have really unique entry points into quantum, but Kris, you have a very personal story that you relate as sort of your origin story and the source of your kind of conviction about quantum computing. Can you tell us about that?
Well, by background, I'm, as you know, a psychiatrist, and I was a very happy academic. But at some point, I decided to build my own startup around a passion point of mine, which was culture and travel. So that became a sizable travel startup, which at some point also was rumored to be a unicorn, and you know how it goes. And then there's COVID, and then there's another unicorn, of course. And on the back or through that, then I also developed some problem on my foot, and I went to see a doctor, and he diagnosed me with a terminal neurological illness, off the cuff, frankly, and it proved to be a misdiagnosis. Quite a bit later, but it took 2 years to fully establish that. And so it was a rough kind of 2 years, of course. And if you're expecting to die, you then are told you're going to live. You have to then, of course, rethink it yet again. Then you have suddenly 40 years ahead of you. And it's not that easy. It's not easy at all. And the one thing you take away from these things is that you can go both ways, I think. You can go direction, enjoy every day, or you can go direction of, let's try to do something meaningful with whatever time I have left. And let's not make choices towards maybe, more trivial things. And then quantum came into view, and it came into view for a bunch of reasons. Namely, he had a misdiagnosis, the mistreatment as well, and the promise that it holds, quantum, that is to maybe help us get better at diagnosis, maybe help us get better at treatment, and maybe drug discovery. But also I had an academic background in computation because I did my PhD in computational neuroscience, so there was that angle as well. And then that brings us then also more to the news of the day, I guess. Zeynep and I both got quite involved in Cambridge quantum computing very early. Very, very fortunate to have been in that position. And we've seen the space grow up for the past 10 years. And put all these three things together, and the enthusiasm also of Zeynep to do something more structured and methodical in quantum led us to set up the fund.
Interesting. And Zeynep, you were at Goldman for about a decade,
Yes.
and you were focused on sort of the deep tech or the longer horizon technology initiatives. What was your sort of moment when you decided quantum is definitely, out of all the deep tech weird topics that are out there, quantum's the one that I want to put my focus on?
Well, I mean, you're right. I did spend a bit over a decade, actually, 11 years at Goldman, and had a great time there. And actually, part of my focus on deep tech was tied to the fact that as part of the balance sheet of Goldman, there was interest in potentially getting access to interesting strategic technologies at earlier stages than they normally would. Because you might be familiar, Goldman does do a lot of tech investments, but normally their minimum ticket size are in the 50 million plus, which means that they are quite active in later stages. But they had noticed that there were certain areas that were relevant to them from a strategic point of view where they would want to be in earlier. And that very much corresponded to the type of deal flow that my team was getting as well. And therefore, about 10 years ago, I had set up the firm's tech initiative, where the aim was to indeed determine with the balance sheet what areas were relevant and see if we may be able to generate deal flow. And when we started these initiatives, like in 2015, one of the key areas we were looking at was the future of computing. So that allowed us to actually analyze many different paradigms, including AI, including quantum. But at the time, it was still a very, very niche ecosystem. We were talking about less than 20 companies globally speaking. And as Kris alluded to, we were lucky enough at the time to meet with Cambridge Quantum Computing, which was raising their Series A round at 50 million valuation. So that was my first insight into quantum. Actually, that was one of the very first companies I met. I thought it was a super interesting company. Brought it to the firm for a direct investment opportunity. Long story short, they ended up not doing, but I had the chance to invest personally. And therefore, I took that chance. And then over the years, Kris and I jointly invested in the company on pretty much every single round they did. And I think the key, that itself was a very interesting investment opportunity, but it was not necessarily a time where a VC fund in quantum would have made sense. We're talking 10 years ago, roughly. And I think what changed for me is that ended up becoming a great investment. We started looking at other investments in quantum. And over the course of my time at Goldman, I probably spoke with over 300 of the now 500 plus companies. And what was very key was that over the last, I would say, 2 or 3 years, potentially the last two, since the last 3 years, there's been a very, very big speed up in the roadmaps of some of these companies. That was partly also led by AI. And it was very, very clear. I kept on hearing on the back of these conversations with these 300 plus companies that there was a huge bottleneck in the Series A and Series B financing. And that was not the case in the past. There was even a bottleneck in the pre-seed and seed financing. In my view, that doesn't exist anymore. But the A and B rounds was still very, very prevalent. And we also noticed that about 40% or so of companies in the space were going to be in need of that type of financing, and how key that was to actually unlock later stage, more institutional capital. To do it right at A and B really changes your trajectory. And that was when we decided to actually take the leap, because we noticed that no one else was doing it, and that especially for larger institutional LPs, it was essential, in our opinion, if you want to get access to quantum, it was essential to do it in a portfolio way. That you have to have conviction on the bets that you do, but you still have to have some level of diversification. And that's how the idea of setting up a proper institutional VC fund to do that came about.
Must be the anticipation in New York.
It's
must
very
be
exciting.
Pretty high.
I think it's been a game changer in terms of broader attention as well into quantum. Having a proper IPO, I think, will be different. And it's great to have been part of that journey 10 years ago and see that company evolve to the first quantum IPO is, of course, quite rewarding as an investor.
Yeah, no kidding. Yeah, Kris, I'm just curious about that whole. You were an early investor in Cambridge. You're now poised, as Zeynep was just saying, to be part of the first proper IPO in quantum, a pure play quantum computing company. What sort of lessons have you drawn from that set of experiences that influenced your activity with Firgun?
Well, for clarity, in those 10 years that are now behind us, I was maniacally focused on my own startup, which was obviously outside of quantum, outside of science. But of course, the interest academically, I carried it with me. And I was interested, in all fairness, maybe more by neuromorphic computing than by quantum computing. Neuromorphic because it just followed more naturally on from my neuroscience background, of course. But quantum on the whole, of course, was fascinating. And yeah, I followed it from a relative distance. I have to say, I saw these SPACs, of course, coming around during or just after COVID of INQ and such like. Was very interested by then that Honeywell spin out merger with Cambridge Quantum Computing. Was incredibly impressed, and we both still are, and that's not because it all has now come to IPO. That is genuinely impressive. I think what Elias Khan has done and has achieved for the space and maybe for the world in general, if indeed this helps ushering in this new quantum era, as your podcast is so aptly called. So that's all on the quantum side and the observational side on quantum. Of course, I took an immense amount of learnings from building my own company with all the bruises and cuts that incurs. And in that sense, you feel well placed, having come out of the lab myself and then be thrusted into the spotlight and not quite knowing what to do with that. And I feel that a lot of quantum founders are possibly going to experience that, because when you raise a lot of money, I raised more than 100 million for my startup, and then suddenly things go up like a rocket. You have no license. You have to start flying it or learn to fly it whilst you're at top speed. It's very, very hard. People say it's hard. It is very hard. So I see it more like that, like strong affinity perhaps with science and deeply technical founders academically, and then an immense amount of empathy and learnings that I can indeed bring to that journey that lies ahead of them. And we're in the early growth stages, so they will all go it, right? Right at that inflection point.
Right.
Yeah.
Right. Yeah. And Zeynep, I mean, I'm really interested in what you were saying about the structural challenges. I mean, I've heard the quantum market being described as sort of a dumbbell shape, right? There's sort of a concentration of capital at the more mature end. There's a concentration of capital in the very, very early stages. As you said, it's pretty easy to get seed funding. And this A/B round is where the bottleneck is. That's what Firgun is trying to address directly. What do you think is sort of the cause for that bottleneck? Is it something specifically about the challenges of quantum technologies, or is it just an accident of the history of the way the market has evolved to this point?
I do not think that it's something that is necessarily specific to quantum. I mean, it's related to the fact that quantum is a very, very new space within deep tech, but it's something that is actually fairly common in deep tech, I would say. I think in the case of quantum, the challenge is that there hasn't been a long enough market for people to have been investing in quantum and seen results of quantum investments. And I think that's why a lot of institutional investors are very new to the space. And you would know that if you are a very large institutional investor, generally you don't get involved in pre-seed and seed stages. So what has developed in those stages is a number of thematic funds that are focused on pre-seed and seed, which are doing a great job. Then there are a lot of family offices that play in that space because people have long horizons in family offices. And the ticket sizes are just smaller. And all these funds that I'm referring to are first-time funds, and therefore their fund sizes are smaller. So realistically, even if they wanted to play in the later stages, they couldn't because of the fund size. If they want to diversify a bit, they're going to have smaller tickets, and it will have to be pre-seed and seeds. That the challenge with that is that you do still do a lot of scientific risk underwriting. And that's just not something that a lot of larger institutional investors necessarily want to do. And I think the stage at which we get in is, the science is proven. It's much more the engineering underwriting and the execution underwriting that we have to do on that stage. And that requires a different type of perspective. I really do see it as a bridge round to larger institutional capital, because by the time when the larger pension funds, etc., do come in, there is a specific customer pipeline. The initial scaling is done. There's much more institutional rigor in the way these companies are set up from a board perspective, governance perspective, etc. So I think that's what we are trying to bring on board. But that did also require a different approach from our perspective. We have made a number of quantum investments, but ultimately we are an emerging fund. But we were quite adamant that the fund had to be of a large enough size to allow us to get into these early scale-up rounds, but still have adequate diversification across the entire quantum stack. And we thought that a $250 million fund would be very appropriate for that.
Yeah. I mean, focusing on that, the diversity, actually, Kris, from your perspective, having more of the science background, the academic background, what are the challenges in trying to span computing, sensing, and communications? I mean, it's a very broad swath of technologies with a lot of different disciplines, frankly, even within the field of physics that are coming to play. How does that factor into your ability to sort of evaluate
Yeah.
the deals that are coming across
Yeah,
your desk?
so as part of our team, we have what we call a scientific co-founder, which is Professor Atatürk, who's the head of the Cavendish lab in Cambridge. So very good when it comes to physics, of course. He himself was the first to say what you just said, like, hey, I don't know everything about everything. In fact, I would be poorly placed to advise you, even technologically or technically, on a quantum cryptography company. That's just not my background. So he came in to help us out with that, very clear and very strongly articulated, but also with then the desire and the plan that he would help us find a subject specialist, no matter how niche it was. Because that is the challenge. Some of these, all propositions, no proposition sounds stupid in quantum. That's one thing. But then to judge whether the execution is there or the tech is scalable, or let alone that it's easily replicable or defensible, you need a person who, like a Mette, who has the broad overview, but then you need on top of it, I think, sub specialists, and then we need to do our own thing around it. If you really want to do it well, it's a deep effort, but that's also, I think, partly what the fund helps solving for those investors who do want exposure to quantum, but just don't know how to pick, and you would almost be ill-advised to do that as well, to randomly pick, because you could so mispick. Yeah.
And maybe on Chris's point, I mean, it does solve a big problem for larger investors, but it does solve a big problem for companies as well. Because what we noticed is that, especially for the A and B stages, there's a lot of cases where there is appetite to invest in these companies, but it tends to be soft commitments. People are just not comfortable enough writing those or making those hard commitments until there is an informed investor who can share their due diligence with them and who can actually give them comfort in their knowledge of the space. And from that perspective, we've been able to invest in stellar companies. And we believe that we've been able to add value as well, because there were cases where interest was there, but it was just not unlocked. And we were able to be the informed party translating some of those findings to larger institutions for them to come in. So I think it helps both companies and investors from that perspective.
Well, and I find it so interesting that, when I sort of first encountered venture was in the early days of the internet, sort of mid-90s. That's when in my career I was, building websites for the first time for Apple and for startups, and founded a couple of ISPs and got to know some VCs. And I was struck by how, in a way, the methodology was almost purposefully uninformed. It was sort of like they bet on teams. They talked a lot about how teams are the most important thing. We just bet on people, and we make 10 bets, and one is 100x return, and the rest of them are a wash. Whatever, it's fine. And that just seems like, I mean, it works in a much more mature technology market. It doesn't work when there's so many unknowns about everything from the fundamental science to how, as you say, Kris, that translates into defensibility and scalability and reproducibility, all the things that turn into a healthy company. So it does feel like what you're doing, you're having to build a much smarter fund because the intellectual challenges to create that bridge to institutional and large scale are much more demanding than sort of the run of the mill, mobile dating app or whatever.
For sure. And over time you might, for the same reason, even because it's what 500, 800 companies in this quantum ecosystem today. Of course, there will be more. Certain subcategories will probably exponentially grow. Others maybe less, but some will. And then you, for all I know, in 5 years, you might have an ion trap VC fund. It would be impossible. You see what I'm saying?
Yeah. I mean, it seems like the demands to create expertise across all these different silos essentially is really, and also to your point about sort of bridging academia and the pure science with technology and business of technology is also really, I think that, having the scientific background makes you, as you say, have a unique sort of empathy for scientific founders, which I think is unique to quantum. So in the early stages of the fund, you've backed Photonic in Canada, Quantum Elements in the US, and Quantum Motion in the UK. So you clearly have a global focus. Is that, do you see that being the geographic diversity of this early stage of this industry, is that a challenge or a strength for quantum, that we've got these sort of global centers of talent that are quite dispersed?
Good question. Zeynep, you want to take it, or I can add to it for sure.
Sure. We definitely take it as a strength because it does provide further diversification. And we think that that's one of the differentiators that we have as well, because as a fund, we are truly global. I mean, we will back wherever the best companies are. As you said, our first two investments were US, Canada, then the UK. There are a few coming up, actually. By the end of June, we will have about 10 portfolio companies. So, and this is properly an international portfolio. And what we noticed is that a lot of the other funds that have been in the space have had more narrow focuses on specific regions, etc., which in our view is just really not the right approach for a field like quantum. So the challenge would have been if we were talking about there being 200 countries and us having to navigate these differences. That would have been a challenge. But I think from the maturity of an ecosystem as well, I mean, we're talking about 10 or 12 countries, and therefore that's still very, very manageable from an effort of getting to know different ecosystems perspective. And therefore, at this stage, it's definitely a huge advantage to be able to invest across the board. I don't know, Kris, what you have to add.
Yeah, I would agree with that. I mean, it's also the countries where the top quantum startups sit are also not random. They tend to all be initially at least spin-offs of top universities that have an ecosystem around it. So in that sense, it's fairly organized, I feel, and interesting to observe. Of course, whatever all these sovereign nations do themselves to support the local ecosystem might over time play a role. Maybe some might come to hinder, who knows? Like the US's announcement is interesting in that regard with putting out these equity intentions. Is very interesting, and other countries may follow, and in certain ways that may have an appeal because it's somewhat underwritten then, but in other ways it might be very off-putting depending on what comes with that funding, of course. And that's anyone's guess at this point, I feel.
Yeah, it's an interesting topic within quantum. It feels like it's very often dual use, right? There's a lot of quantum technologies that are dual use. There's also this sort of growing question about sovereignty around the cloud between Europe and the US. As you said, the US is now talking about taking equity positions in quantum companies. And Firgun is anchored by the Qatar Investment Authority. Do you foresee that that sort of mix of dynamics potentially creating challenges around the sensitivities or what entities are allowed to invest in which firms, or what countries can collaborate with other countries, or IP topics, or ITAR restrictions, export restrictions? Is that something that you sort of anticipate Firgun's going to have to navigate?
Me?
Sure, I'm happy to. I mean, there will definitely be a lot of national sensitivities, I think, across the board. And I think investors are also aware of that, and I think are aware of what to expect and what not to expect. In our case, I mean, at a $250 million fund, the QIA, of course, is our anchor investor, and therefore they were instrumental in putting the fund together. But at a $250 million, they will still be a minority investor. And I think the same can be said about other investors. I mean, we know that a lot of the European countries are also investing in quantum. The UK is investing in quantum. So I think this will be a broader topic. And I think I see the big difference from that perspective being between China and the West. And then, of course, there are certain alliances that are created between different geographies that will play a key role. But I think the sizing of those investments and the type of rights that are given to such investors will be the key determinant. And it's very hard to say anything in a deterministic way. I think we will just have to watch and see how things evolve and what are the type of partnerships that will be created. Because what is key to understanding as well is that at this point in time, we are talking about a very global supply chain. We're talking about the need to collaborate at some level or another between different countries. And I think that will also affect how people treat investments.
Mm-hmm. Well, and the skills pool, as you said, Kris,
Definitely.
it's emerging out of these universities that have built and ecosystems have built a deeper skill pool in a very, very niche set of skills. So I mean, to a certain degree, you don't have the luxury of just selecting one geography because there aren't enough people in any one geography to actually fuel this industry. It's a fascinating challenge. So okay, so you talked about QIA and other LPs. When you're positioning the fund and talking to potential LPs about joining the fund or investing in the fund, what are some of the biggest misconceptions that you have to, like, how much teaching do you have to do, I guess is my question.
Yeah, I think the key thing you hear is, oh, are we too early or are we too late? I think that's kind of, is it still very far out or is it already there? We've missed the boat or that sort of thing. Is it hype? You get that sometimes. Mostly the former, I would say, Zeynep. Would you agree? Like, is it too early?
Yeah, probably. Not. I think there is more. I think there is an understanding that there are a lot of people who missed out on AI investments, and they can see certain similarities between how quantum is evolving and how fast things can change. And there are people who want to make sure that they don't also miss out on quantum. I think that's one type of investor. And the reality is that a lot of the people we've spoken to had been looking at quantum for a while, so we don't have to do the very, very basic teachings around quantum. But they definitely see the fund as a way to learn more about the space because we have LP updates, we have conversations with them, etc. So there's definitely a learning element that comes with wanting to invest in a fund. And also an element of wanting to observe how these 25 companies evolve and who they may be able to back later down the line. Because we do have quite a few large institutional investors that we're in discussions with who are keen to make investments once these companies get to the later stages.
But mostly you get a relief in LPs that you're not banging on about 99.9% gate fidelity and photonic interconnect, because then you would lose them within a minute. I mean, and that is
back to the scientific founder challenge, right?
Yeah, exactly.
That's they tend to go to their happy place, which is the experimental results that immediately involve all kinds of jargon and esoteric knowledge that loses your average. Yeah. Coming back around to your personal story, Kris, and sort of tying it to use cases. I mean, and particular portfolio companies, like the idea of the potential for quantum technologies to give us, you said drug discovery and also treatment or diagnosis of conditions. At the root of it, chemistry and biology are quantum mechanical, and therefore, if we're building these quantum mechanical devices, technologies, then there seems to be an intuitive, inevitability that we're going to end up with more powerful tools for health. Is there a particular use case or a particular algorithm or a particular sort of milestone that you have in mind around that kind of breakthrough?
Well, I mean, there is qubit counting, of course, and you don't need quite as many for doing something sensible in that area as you would perhaps need to sort out logistics or climate change. So there is that. On the whole, though, don't get me wrong. I mean, I have that interest and desire that the technology can grow sufficiently to bring about change in that domain. But you cannot will it into being. The space will evolve at the pace it is set to evolve with the capital and the talent in it. I mean, because often you hear people, I feel, almost wanting to will quantum into commercialization and industrialization, but you can't will that. It will at its own pace get there. And the same will be true, I feel, for drug discovery. So we see companies and they all hold a lot of promise, but to say like, okay, this one is going to get there in 3 years versus another is very difficult still to say, because there's an immense amount, and that should also not be forgotten. I think when one thinks about these, like founders sometimes pitch like, oh, I'm going to solve Parkinson's and I'm going to find a drug for this or for that, but maybe we're solving Parkinson. That always sounds a bit too grand to me. But finding a drug, maybe. But then there's a whole forest of regulation that you still need to go through as well for that to become a
Yes.
reality. So it's only the first part of the road, I think, there, the technology, and that gets underestimated.
Yeah, I wonder about the regulatory hurdles in life sciences and healthcare, especially when we haven't even really started to grapple with what verification of a quantum workload looks like, right? I mean, there's some very early discussions about quantum verification.
Yeah.
Once you have a device that's not classically simulatable and you're getting results from it, how do you verify those results? It's going to be a very interesting question.
No, exactly. So people who hold that out as an investment thesis, like we're going to solve X or we're going to create drug Y. I mean, AI has been disappointing in that regard. Quantum won't overnight change that.
Yeah.
I mean,
Yeah, it's very true. And Zeynep, I mean, your background in deep tech, how do you, I mean, as Kris just said, there's uncertainty. There are error bars that are kind of unmeasurable in some ways with the progress of, let's say, a large scale, fully fault tolerant quantum computer is at some point going to happen, but we don't really know exactly what that timeline is. How do you measure? How do you manage that level of uncertainty around the investment horizon for your LPs and for the fund itself?
I think there are a few elements. One is you might not know the exact time, but you know roughly what the potential revenues are going to be at full tolerance. I mean, there's been a lot of analysis done by the McKinseys, by the BCG, so that's actually not an unknown. And if anything, this is all we can think about with our current understanding, and there will be a lot of problems that we're even unaware of. So the pie is is expected to be even bigger than what we can currently imagine. But we do have a sense of what that will be. So the key differentiator, I think, from our perspective as an investor, and that's also true for people who invest in the larger public companies, is what is the likelihood of this company you're backing to be one of the winners? And that requires a completely different way of thinking, because you don't do that thinking by discounting cash flow. You really have to have a good understanding of who else they're competing with. So that's why I think a VC is quite different from an investor who does individual investments and who's not fully in the business. So if you have a good understanding of who the other key players in the field are doing and how you can actually have a much better sense of how realistic their roadmap and their execution plans are as well, based on how much money they have, their teams, their global ambitions. So that, I think, from that perspective, I think we're in a very good place because we have access to pretty much everyone and we can compare them quite well compared to people who are not fully in the space. So that's one element. And then the other thing that I would mention is that you're right in thinking about the fully fault-tolerant quantum computers that might be 10 years away, potentially 8 years away. Some people say 15 years away. But I think that way of thinking is a bit too binary for the space, because we don't need fully fault-tolerant quantum computers to start to see results. We just need higher levels of qubits and logical qubits. And that's why we do think of it as a gradual progress as opposed to a binary outcome. And we are already at, in the case of Quantinuum, 50 logical qubits. We know that once we get to the higher hundreds, lower thousands, we will be able to see some kind of results in drug discovery, and then more and more spaces as we increase these qubit counts. So our investment thesis is not based on when they're going to have the fully fault-tolerant quantum computer, even if we do definitely have a view on that based on their roadmaps and the feasibility of their roadmaps. But it's also based on the overall trajectory of their roadmap and who they can start actually working with once they get to the XYZ amount of qubits. So that's why I think from an investment point of view, it's actually a more nuanced investment thesis, and that has a bit less downside than people think, because there is no. I mean, I do actually think that because of all the things that are happening geopolitically as well, quantum is just an area where you cannot not have quantum computers when you know that there are other parties who are investing 18, 20 billion plus and who will get there in the case of China. And therefore, it's an area where the West cannot lose, and therefore there will be enough funding to get there. Right. And therefore, from an investment point of view, it's one of the most asymmetric type of returns, because you actually have a buffer on the downside as well, if you think that you can choose the right companies.
Yeah. Interesting. So by the time this podcast airs, if all goes according to plan, there'll be quite a large sort of success based on the fact that both of you were early investors in Cambridge, which has become Quantinuum. If you fast forward to the end of this fund one for Firgun, what do you see beyond the Quantinuum IPO as being sort of direct measures of success of the fund itself? What are your aspirations for the fund's outcome at the end of, as is it, Firgun 1?
Yeah, well, the number one would be good returns for our investors, of course, and a good multiple on the investments. That's by many ways the single criterion that we need to deliver on and want to deliver on. But then, on the whole, we very strongly believe that quantum in the next 10 years, whereas it may have valleys or autumns or winters or I don't know what, that in 10 years we'll be in a better place. Technologically, for sure, you would think. Regulatory, who knows? Who knows? And nobody knows what comes after this whole AI volcano, right? Or this AI funding volcano, neither what that means societally and for business and industry on the whole, nor what crater that might leave in people's wallets and minds if it doesn't quite deliver. Who knows? I mean, no, but really, that will.
Yeah. Sometimes I see it as being the subprime crisis multiplied by the .com bubble, and I think, wow, that could be quite the crater.
It could be. It could be. We all hope not, of course, but it could be. It's
we all hope.
Yeah. So yeah. So
orderly unwind, please.
Yeah, but something like that can give. I mean, if that. Yeah, I mean, I think the AI storm. Yeah, it gives a bit of protection for quantum still to grow a bit more quietly. Yeah. Like even if Quantinuum goes 10x, God forbid, it still won't reach those levels of the anthropics. I mean, so yeah, we're in the shadow still, which is good.
Yeah, which is a good place. I agree. And Zeynep, how do you see sort of the aspirations for this fund?
No, I mean, I would agree with what Kris said. I think my expectation, more than an aspiration, is that there will be more consolidation in the space. And therefore, I think from a VC fund perspective, that creates a lot of opportunities.
Yeah.
And what my expectation is also that, I mean, Quantinuum is just a case on its own. I think the level of success and the speed at which they have progressed, and they are clearly one of the quantum majors. But I do think there is room for more quantum majors across different modalities as well. And that's one of the things that we're trying to execute. I think seeing some of the patterns that we've observed in Quantinuum, if we can see similar patterns in some of these other modalities, we would definitely want to have them in the fund. And therefore, my hope is that within the fund, we will be able to deliver on a few success cases, at least for our investors. And I think that seems doable from what we see today.
Excellent. Well, this has been super, super interesting. I really appreciate your time. I know, Zeynep, you're in New York, and it's a busy week, so I appreciate you carving out some time on your schedule. And Kris, thanks for joining from London.
Pleasure.
Thanks to both of you.
No, thank you so much for having us.
Thank you for having us. It was a really nice talking to you.
It was a great conversation.
Thank you.
Yeah.
Thank you, Seb.
My thanks again to Kris Naudts and Zeynep Koruturk for a candid conversation about the slightly unglamorous middle of the quantum financing stack, the part of the journey that doesn't get a closing bell or a ticker symbol, but largely determines which companies ever make it far enough to have one. The thing I keep returning to is the contrast between the two halves of this episode. We opened on a stock market that has, at times, behaved as though quantum advantage were already here, pricing the story rather than the science. And then there's Kris near the end, gently insisting that you cannot will quantum into commercialization, and that the field will evolve at the pace its capital and its talent will allow, and the job of a serious investor is to respect that pace rather than pitch around it. Those ideas sit in real tension with one another, and the week of the field's first proper IPO is, I think, exactly the right week to try to hold both of them in your head at once. Show notes for this episode, including links to Firgun's portfolio companies, the coverage of their launch and first close, and a few related NQE episodes on quantum venture investing and ecosystem building are at newquantumera.com. If you'd like more of this kind of thing in your inbox, episode notes, occasional essays, and what I'm reading in the field, sign up for the newsletter while you're there. If you found this episode valuable, please subscribe wherever you listen, leaving a rating if the platform allows it, and send it to someone who's trying to make sense of how quantum actually gets funded between the lab and the IPO. It genuinely helps the show reach the right people. This episode was brought to you by Outshift, Cisco's incubation engine. Computational demand is outpacing what classical systems can deliver in drug discovery, materials, finance, everywhere. Outshift's bet is that the answer isn't a single quantum machine, but a scalable quantum network, distributed devices connected through open standards and a vendor-agnostic architecture, working as one resource. Learn more about the Cisco Universal Quantum Switch at outshift.com. One last thing before I let you go. Unitary Hack is underway right now, the Unitary Foundation's open source sprint where you get paid to close real issues on real quantum software projects. If you've been meaning to get your hands dirty with open source quantum code, it's not too late to jump in. Head to unitaryhack.dev to find the issues, claim a bounty, and join in. There's still time to contribute. Full disclosure, I'm a fellow with the Unitary Foundation, but I've been a huge fan of the Unitary Hack for years, so I'd be pitching this whether I was affiliated or not. Thanks for listening. I'm Sebastian Hassinger, and this has been The New Quantum Era. Theme music by OCH. See you next time.